All right. Hello, everyone. We're back with Mike Ziegler. How are you doing, Mike?
I'm well, Maria. How are you?
Doing well. Mike,
Fantastic.
we talked about rates 10 days ago, and this past week we've had some ruffling of the feathers with the rate topic again. So I wanted to do a follow up conversation and have you tell us what happened 2 days ago, September
Sure.
17th, the day that the
Right
rate news went crazy.
on. Right on. Yeah. So, hey, the Fed's first time this calendar year lowered the federal fund or the Federal Reserve fund rate. They lowered it by 25 basis points, so a quarter of 1%. And they basically parked it between 4 and 4.25 on their end. What does that mean, right? Because that's every single client I think that you and I talked to that week or this week, and I've talked to outside of our communications. They've all said, "Well, hey, is my rate getting better now?" And
Right.
the simple answer to that was no. Ironically, mortgage rates on our end actually went up slightly after the announcement, which seems so crazy to talk about because it just doesn't follow the narrative that the news gives us when they talk about rates and the Fed cuts and whatnot. But yeah, it was certainly an exciting week to get clients at least calling, but it wasn't necessarily the news they were hoping for, I think. So
Right.
um, yeah, I mean, we should get into the reason why, and the biggest reason why is mortgage rates for homes are tied to mortgage-backed securities, which are from the highest view of things, a tradable commodity. And these traders are gamblers, and I think they were anticipating a bigger cut from the Feds.
Hmm.
So most of them already had at least this 25 basis points or quarter percent kind of baked into their rates leading up to the announcement. I think most of them had more than that baked in. So in turn, when the Feds only cut it 25 basis points, the rest of the lenders out there that had were anticipating a bigger drop, they had to do some changes on the rate sheets, and so in turn, their rates went up. Now, it wasn't huge, but it certainly was noticeable for those who were following as closely as I do. So,
Gotcha. So I guess if your rate was locked, good for you because you didn't get
100%.
hit with that, right?
Yeah,
Now, just to clarify and to make it very clear, mortgage rates are not 4 point anything, right? Like that rate is not directly what a mortgage rate is. And we've been talking about that and trying to help everyone understand that that's not what that means. Um, now, what what would you say right now? I mean, you and I have had a conversation about this, right? Where we're like, all right, people need to stop thinking that they can time the market, wait for the perfect time to get, a quarter or even less of a change in a rate. If you can afford the monthly payment on a house, then you should buy. If you can't, then that's
100%.
a different story, right? What would you
100%.
add to
Yeah.
that?
I think you nailed it, right? Like, I was told a stat a long time ago when I first got in this industry, and I believe it to be true, that the average mortgage only lasts about 30 months. And what that means is that for an average consumer or homeowner, your mortgage that you're in, you only have that exact fixed rate mortgage for about 30 months. And then people either buy a new home, they refinance for cash out purposes, rates drop, they get a better rate. Who knows? There's a million different reasons as to why, but the average mortgage seems to last about 30 months. So if you take it from that perspective, right now there's such a great opportunity to buy because the prices of the homes are at a great value, I think, comparative to where they have been the last few years. We're seeing a lot of seller concessions at play. I think sellers are more amenable to fixing things and really paying attention to those the home inspections, making sure they're cleaning that stuff up before they sell. And if you're really looking at like, hey, I might only be in this payment for maybe 30 months, it's a great time to buy. And truthfully, rates now are as good as they have been in years. It's not as scary as it was, even heck, 10, 12 months ago at this point. They were
Right,
much worse than now. So,
right.
to your point, I think it's a great time to buy and really, if you can afford it, go for it. Because this house that you're looking at today is going to be a lot more expensive if rates continue to to fall off over the next few months as we head to the end of the year, as the Feds talk about maybe more rate cuts. That's going to accelerate the purchasing power for a lot more folks. So you're going to have more competition in the market.
Right, right. And that's what we've been seeing on our end. Like you mentioned with the negotiations, you have so much more power right now than you did in a market where you were competing with multiple offers. You were competing with people who were willing to pay above appraised value, and you were left powerless to whatever the seller wanted to do. And that's not the market that we're in right now. And as a buyer, I think people need to take advantage of that, need to capitalize on that. And if the rates do go down, great, they can call you and do a refinance.
Right.
But if they
Absolutely.
don't, then hey, good for you for getting in ahead of the rush, right?
Absolutely. And I think for sure come next spring, when the purchase season really swings back around, there's just going to be so much more competition in the marketplace. And right now we have a great supply of inventory and rates are decent. So I see no reason not to.
Yeah, for sure. Well, thank you, Mike. I appreciate you
You're
updating
welcome.
us with what's happening with the market today. Don't 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 forget about us. Keep us posted with what's happening
For
with
sure.
rates. And
Always.
if anybody wants to talk about a refinance with Mike, if you ended up buying at a 7-8% rate, right now might be a good time for you to call Mike. And if you're interested in buying, make sure you call me.
Maria, have yourself a great rest of your day. We'll talk again soon.
Bye, Mike. Take care.
Bye.